We're back on halftime with our call of the day. UBS getting more bullish on Nike, saying the stock could double. Steph, you own Nike shares. Do you agree with what this note says? Although the base case view is that could be a global macro slowdown, but they still think this Nike holds strong.
It's a longer term call. They're talking about $650 in earnings power by fiscal 26. So there's a lot that can happen between now and fiscal 26. That being said, they just reported 323. So that would be a very big jump in earnings if they can get there. And it's predicated on them getting to mid-teens EBIT margins, which is what the company has guided to. And this analyst believes that they can get there because of raw material costs coming down, because of freight costs coming down, because of pricing power, DTC, inventory rebuild. So I get all of it. I don't think there's anything here that changed from this analyst view today. I just think that they're basically looking out and seeing what the opportunities can be. And oh, by the way, it's getting no credit for the slow turn in the consumer in China. And that's another reason why I own it as well.
Right. Yeah, that's a really good point. And you're making some other moves in retail as well.
Oh, yeah. Yeah. Well, I sold out of Este Lauder. I mean, it's not a good call by any means. And that basically is because they just came out with a cybersecurity issue. And I just think they're going to have to invest more. And so as a result, margins and the expansion that I was expecting to see, it's going to be muted. It's going to take a longer time. I might go back into it in a couple of quarters because I do think that's how long it's going to take to get resolution here. And I put that money into Target simply because the stock is down 26% from its highs. They're doing all the right things in terms of inventories and getting them down substantially. And I do think traffic is going to surprise to the upside. They have a value proposition, and the stock trades at 15 times forward estimates, gives you a 3% plus yield. So I'm in that one.
So even though that the consumer discretionary categories were much weaker than staples, and Target obviously skews higher there than say a Walmart, you have confidence that things can turn around.
Yeah, I mean, I think that they're balancing out their mix, right, between the durables and consumables and discretionary. And so he's been working on changing that. I don't know if they're going to get there in this quarter, but I do think that they still offer the value prop, as I mentioned. And again, the valuation here and the fact that, I mean, people just hate this stock now. This has gone from a loved stock to an absolutely hated stock. And I kind of like that risk reward.
Okay. One stock that I think is still very, go ahead.
When do you think the margins get back to 6%?
Yeah, I do. I definitely do, especially as inventories come down, right? And they have been coming down. They were in the 40% plus range, right? And so they've come down substantially, and I think that's going to help in the back half of the year.
Well, one retail stock I feel like is widely loved is Costco, Jason. That's where you are right now.
An easier one to own.
You are expensive though, right? Trading at 40 times forward, but it's up 24% year to date. They actually, talk about password crackdown and all the crackdowns we've seen. They've done some membership crackdown in the last month. They have 125 million card holders across the globe. I mean, talk about a renewal stream. They're always known for their cheap prices on their products. I just think that they've always been a juggernaut. And I do think also as well as a retailer, with some dollar weakness, they have almost 30% of their business overseas. That will also be a tailwind for the stock. Yeah, talk about those renewal rates for Costco are very impressive. I think them and Amazon Prime, some of the highest in the mid-90s, I believe, almost year after year.